Good morning, traders. This is Barry Wilkie with StartupTrading.com. It is 10 minutes till 9 a.m. Eastern Time on Thursday, October 16th. So, looking back at yesterday's session, right, I said I really wasn't feeling it as we were opening up close to the expected move of the day. Uh, that I just, to me, the best trade was to look for structure and to short it uh, against that and just, go with that. So um, once we hit this breakdown, I was able to participate in this second leg down, and then I was done for the day. So sometimes, like Jack always says, patience is what's key, and you got to trade what you see, right? I mean, the best trade might have been taking longs, but there was money to be made both sides, and you got to do what makes sense to you, right? I'm more of a quant trader uh, than anything probably at this point in my career. And we did hit that call wall at 670, right? There is room above that call wall. I want you to be, very clear about that. But uh, and I think Holby scalped it for a few points there, but we actually came down $11 from that call wall, or 110 ES handles as it hit, as the market makers were just, not today, right? And then we also have profile, right? These pink boxes, they're going to show up probably a different color on yours. I apologize for that, but it's too much of a pain in the ass to hard code the colors for these long-term boxes. The day-to-day ones on the positioning, I do. So the outside grids, you see what I see. The middles, the colors aren't going to always be there. The values will be, but the rest for these shaded boxes of the signal prints, they won't be. That's just a defect in toss. But what I'm trying to get at with this, right, is we have poor structure from Friday. That's what these pink boxes are above. We've been chewing into them little by little all week long, right? And then we made poor structure um, uh, as we come up that we hit. So basically, that was the bounds of your trade, was the between the poor structure. We just kind of filled in and balanced out. And if didn't really it was up 184 points for the NQ, up 30 points for the ES at the end of the day, and we stayed within the bounds, right, of the expected high and the low of the day after breaching over the expected high move for the day. That's, again, I keep saying that people can change their positions, money can flood in the market and override these, but it just gives you basically a basis for how the major players in the market were feeling at the end of the previous day of what they thought the range for the next day would be. And that's why I marked these expected high and the low moves of the day. That is your expected range, is what it is. It doesn't mean you're going to touch the high or you're going to touch the low, but it means that anything in there is status quo. Um, so I think I beat that up. So remember, last Friday was our whoosh down, right? And we just come down to where all of this support was, right? This is from rollover. That's where all these traders are trapped. Basically, from September 11th on, right? That is the impulse that started this impulse up. That was a look above and go, if you will. And then we just come back down and rechecked it. I think there were some fibs down there too, if I remember right, from what Jack was saying. So, the it tomorrow obviously is Friday. So 1 week ago, the market, the session opened up. Uh, right at 67.80 basically, and then went down. And if we look at where the bell opened on last Friday, we can see that the bell opened up at 66.88, or I'm sorry, 67.88 quarters where the bell opened up. Uh, so that's your marker for just a FU to the Bears, right? So keep that in mind. That's your FU trade for tomorrow's Open. We'll see if we end up trading up there again. And for the the session, again it's up there at uh, 67.80. So within a 10 points either way up there. So as we look at the structure, I'm not going to beat up the ES has a little bit more defined. You could almost draw uh, a box between these candle bodies right in here, right? And that also matches that high from yesterday. So that's going to be your marker. So that box, and just eyeballing it. And you could really, I'm going to remove this. You could actually take it from here and probably down to these highs. Right in there. So that box of, potentially you got 1, 2, 3, 4, 5, 6, a little over 6 trading days up there, and that box is going to be from 67.55 basically to 68.05, rounding it off. And as we come up here, and so the midpoint of that box is going to be right around 67.80. That's going to be almost where that leg start down started on last Friday for the ES, right? That leg start down, and it's not a true leg start, right? Because we don't have 3 candles, uh, going down, right? So, but this is where this wave, the selling, really took place, is from this area of the chart. Uh, so you're looking at 67.80 on the extended, and you're looking at 67.88 quarter. That's what we just went over on the other one. So we should have done that for the Nasdaq. My apologies. Um, 67, or I'm sorry, the open was 25. Uh, let's just call it 288 is your FU trade over here for the session, and 25,313 half for the bell, right? So that's your FU trade. And as we look at really where positioning is now, you can see the expected high move of the day for a toss, right? The range status quo, right? And Tuesdays and Thursdays seem to be more of impulse days than the rest of the week on balance, right? So there's like a 20% higher chance that you're going to have a trending day on a Tuesday or a Thursday than any other day of the week. Uh, so we'll have to see. So here's your bogey, which is right at the bottom of this balance. So right around 25,200 is your expected move today. That's still 120 points up, or $3 on the Qs. And then your expected low move of the day is right at the bottom of this. So basically, there's still uh, institutional players, right, larger players, are still thinking that, this is your range that is safe to sell against, right? Because that's what they do. They sell against these ranges. Uh, is between this poor structure, uh, but the next box up, right? The bottom of the next box, and this still from where we hit yesterday's low is where you're looking at. And for the ES, it's not much different. A little bit above yesterday's high, right? So right around that same window and right into this as well. So the ES hasn't been able to make any traction over value area high yet. The Nasdaq is peaking above it. The Russell's kind of flirting with it, but not really getting anywhere. And the Dow's just like asleep over here. So let's get into positioning, right? So for today, 6,900, someone sold a ton of stuff for today that expires at pair because they think, hey, that's a safe bet. That's 200 points up higher than where we were. There's a fat chance in hell probably that we trade up there uh, today. So this I wouldn't think is actually, potential, right? That we can trade up 200 more ES handles today to touch this. Uh, so that I don't think is there. 6,700. right, is a near-term large gamma. That's right around where we would be if we opened on the cash market. The cash market closed at 66.71. Uh, ES is up around 26 points, so we're probably would just be a couple points under the 6,700. So that's going to be your early bogey on the cash, right? And do we pick a side? So if we're going to consolidate in the AM session, it's going to probably be around the 6,700 level. If we blow through, it could be a little bit higher. That's just looking at positioning for the cash market. Looking at the SPY, it's a little bit cleaner, right? The SPY is trading 668 almost. I should call it 668. So uh, you're right here on there. So 670, right? That's that call wall we fell from yesterday. But if you look at the positions that expire today, right? And this is the sum of the week. Basically, there's only 2 days left this week. It's just summing uh, Thursday and tomorrow. Tomorrow is OPEX, so those numbers tend to be higher, right? So these positions have been building for a year, right? This daily expiration has only been, for 4 or 5 weeks that expires today. But you can see for the daily, right, this is what the market makers have to worry about today and a little bit of what's going to expire tomorrow. Uh, right? They have to hedge. But you can see that from 670 to 676 how it looks today. But if you look at 670 to 676 tomorrow, you can see how minuscule some of those offsets are in there because tomorrow's OPEX dwarfs today's expiration, right? And size and position. Uh, but with that said, there is room, and I said this yesterday, above 670, right? We could meander all the way up to 675, 676. That would be around, 50 handles. I'm sorry, that'd be around 25 handles higher than we hit yesterday, right? To get up into there. So as we, look at that, we'll have to see. I'm sorry, that is 50 handles. I I need some more coffee. So, and you can see there's a little lump between 672 and 673. So that's 20 to 30 handles above on the ES, higher than we were yesterday, right? Each one of these dollars is 10 ES points, is what I'm trying to get to. So looking at the Qs the same way, and you can look. I want to make sure you look both on all these indexes. These are your big bogeys. If you look at tomorrow's expiration, these are your big positions for the week yet, right? They're bigger than today's. So, looking at tomorrow's, it's still centered around that 670. So, although we could float up to it, we might revert back to it tomorrow, potentially. So, looking at the uh, Qs the same way, the Qs are currently trading 605.75, so just a little bit above uh, the 605 level. So you can see for today, right, you've got this going on, and you can see 610 is a big level for today. But look at the sum of this week with when we add up today and tomorrow, you can see 610 uh, still is not. It's about half the size. 605, 610 is still about half the size of 600. So 600 is still your bogey. And if you look at uh, a lot of what's going on for tomorrow, 590 would be your pin strike for tomorrow. So that would be uh, basically 600 NQ points down. I don't know if we're going to hit that or not, but if we do have, uh, some downside swoosh, that should be kind of where your floor below 590 with a rising VIX. That's when you get into your negative feedback loop between now and tomorrow. That would be pretty severe, but I think it would be hard to go 600 points down today and then get into a negative feedback loop after that. I think we'd be a little exhausted at that point in time, but you have to be aware that that is a scenario, that's your pin is 600 points down. Uh, as long as the VIX doesn't get a bid, right, kind of stays flat to neutral, you'll get a little bit of a lift, right? So six for today, status quo, 603 to probably 607. So we were just under that here at 606 a few minutes ago. Looking at that, but we'll have to watch these pins. So with all that said, I think I beat up positioning for today and tomorrow. Remember, tomorrow is a huge expiration. Uh, so we have to see first if we can get over yesterday's area. And you can see the ES is still, there's still sellers that are not letting it get over value area high yet, right? You break value, that would be your first bump above. And you can see you've been in a Superman up most of the overnight session since basically about 12:30 a.m. Eastern time last night. You've been in the Superman up, and we'll see if that goes or not. But my caution to you is, this 670 uh, could get traded over today. So don't be so cocky with it unless you see the VIX rising, you see some other catalysts, you see a lot of structure, but I wouldn't be as willing to, hedge against that today as I would have been yesterday. So, with that said, your large gamma is still 605 for the Qs, and we could get up to 610, right? 609 is basically your high range of the day. So, uh, watch 607 half first as we if we get up there, and then so you could float up. So even though we're closer to the top, I still think because of that FU trade that is from last Friday, uh, we'll have to see if they just sell it again from there tomorrow, and then take it back down to more realistic things. And so we could kind of drift up between now and tomorrow's at some point in time and just frustrate people. So watch the structure above. Watch your markers. Again, you've got to prove yourself over 670. You would need keep this in mind, and this is why the VIX is on this. Here's yesterday's VIX range on the futures, right? 1944 to 2160. To maintain above yesterday's high, right, you should be maintaining below yesterday's VIX low. To maintain below yesterday's low, you should be maintaining above yesterday's VIX high as a general rule, right? That's probably like a 68% rule. It's not a hard and fast rule, but it is a little bit a slight edge to watch that. And then normally, if you can't uh, if you're testing outside of yesterday's range and the VIX is not confirming with the price action, you're going to fall back into it, or the VIX needs to catch up, right? So is it the chicken or the egg? Does the VIX increase because of price, or does price, move because of the VIX? You can argue that to the end of the days, end of time. So we'll see what Jack's looking at next, but I do have a little bit more bias up towards the higher side today for some retest, and we'll see if that plays out. Uh, you guys have a great day, and we'll talk to you tomorrow.